Hello, Bulls and Bears. How is everyone today? I hope everyone is doing well. We're back, as usual, with another dose of economic reality. And what we're seeing now is the global economy beginning to implode at a faster pace. And we see a lot of conflicts breaking out, just as we predicted. It's going to get worse. There's going to be a lot more conflicts breaking out, a lot more war. And we're going to see, in the next year, we're going to see some unreal events occur right on U.S. soil. We're talking about social unrest, massive poverty, massive homelessness, and just a lot of turmoil. Let's get into some financial/economic news here today. We've got a warning out of J.P. Morgan. The wars, compounded by last week's attacks, may have far-reaching impacts on energy and food markets, global trade, and geopolitical relationships. This may be the most dangerous time the world has seen in decades. He said that. That's Jamie Dimon, accompanying a J.P. Morgan third quarter earnings report, right? So the warnings are everywhere. Now, we've been hearing warnings for a while, but a lot of the warnings are starting to come true if you look at what's happening around the world right now. And yes, it's coming here to U.S. soil. Let's get into some other financial news here. I recently spoke to a appraiser, and in my job, in my occupation, I'm lucky enough to have people that I speak with inside different industries, the lending industry, automobiles, housing. I talk to appraisers and agents, and what I found out was that a lot of the appraisals that are being done right now are being done because of foreclosures. So I went ahead and looked at some foreclosure news. We're going to get into that here in a minute, but roughly 2 in 10 foreclosures that are this appraiser I spoke with, 2 in 10 are because of defaults. So it doesn't mean that there's a foreclosure happening yet, but the payment is late. And so I went and looked at some of the default numbers here and the foreclosure numbers. And guess what? They're starting to increase. Now, they're not very high yet because we're coming off a historically low time for foreclosures because of all the moratoriums that were put in, because of the 40% of all dollars in existence were created just in the past 3 years. The flood of money pumped into the economy, right? Helicopter money. The foreclosure numbers are up 28% in the third quarter. Now, it's still pretty low, but still, the rise from one quarter to the next quarter is pretty significant. So from the second quarter to the third quarter, and what we're seeing now is a total of 124,000 properties in the U.S. Not a lot, considering there's millions and millions of properties. But here are some of the other numbers I wanted to get into here. So a state like Alabama, 1 in every 1,464 homes in foreclosure. Again, not a lot, less than 1%. So less than 1 in 1,000, right? So we're talking a fraction of a percent, closer to 0.01%. Small number of homes. This is just the beginning, though, and we know what happens when this starts to accelerate. It's really hard to slow down because when people start losing their homes, they're also not spending as much. They don't have that equity. And think about this. If you have equity in your home, you don't have to sell at a foreclosure. You can just sell the home and pay off the loan that hopefully the balance is lower than what it's worth because you have equity. After you pay the fees and all that, of course. So, yeah, it's going to be really interesting to keep an eye on this here. And let's just bring up a start here out of Adam Data Solutions, and that's going to show you foreclosure starts. If we look to the right side of the chart here, you're going to see we are in an uptrend, and it was historically low starting in 2020. You see where that dips down right there. Well, now we're on definitely an uptrend. So we're going to revisit that here from time to time and see how things are looking. Let's talk about oil prices. Oil prices are going to continue to rise. The latest headline here that tells us that's going to happen, that gives us the direction of this. Oil prices are spiking amidst sanctions being applied to countries that are exporting oil. Some of the OPEC nations were actually putting sanctions on them for alleged violations of the G7 price gap. So interesting. We'll have to keep an eye on that. Oil, not too much of a spike though today per barrel right now as I'm recording this. Well, actually, a pretty big spike if you look at it. $86. Now remember, we were just at $90 recently, but up 4.3%. That's not a small increase, especially in one day. But we were just at $90. Taking a look here, how recent was that? Back in September, we breached $90. So now we're ticking back up here. I think it's going between 125 and 150 here by the middle of next year, by next summer. We'll see if my forecast comes true. So far, we've been right about a lot of stuff, right? Next, so let's talk about this. Giant banks show resilience as profits surge. That's the headline here out of Yahoo. Quote from Jamie Dimon again. Our lines of business saw continued momentum, demonstrating the power of our years of investment and value of our consistency and fortress. What does that mean? That's just strange, isn't it? Fortress principles is what he said. So folks, here's the bottom line. If you're a bank right now, you can loan out money that you don't have, and you can charge a lot of interest on it. Mortgages 7%, credit cards 20+%, auto loans between, you're lucky to get 6% now, 6.5%, maybe up to 13%, even 20% for subprime auto loans. You can't lose right now as a bank because you don't have to have the money in the deposits, right? So of course they're going to make money hand over fist and profits are going to surge. Until somebody changes the law that actually makes banks accountable like you and me, this is going to continue to happen. The banks, of course, they're going to pretend, oh, it's good management. We have great people here. We're so smart. We're great investors. When really it's just the way that the money is created right now. It's created out of thin air, digits on a screen, and we've got a lot of people making a lot of money off of this system right now. So it's pretty nice if you're in the right spot. And you can kind of do that as a consumer. You can kind of use debt or use digital money or borrowed money, money you don't have, to make money, right? If you borrow money to buy a home when it's time to, well, good time to buy, and then that home increases in equity, you've just used the system. You've used the system of getting money you don't have and making money off of it, right? Same thing with any investment that goes up. If you use a loan to make the investment, then later down the road, if it goes up in value, you're going to make a profit. So you pay off the debt or the borrowed money, which is just digits on a screen, and you make money, right? So you can kind of play the game on a smaller scale here as consumers, as individuals, but the mega corporations, the mega companies, the big banks, they have all the advantage in the world right now. The problem is a lot of people went out and started LLCs to invest in real estate, and they're very quick to walk away from a bad mortgage or a loan that's too hard to keep up with. Because LLCs, you could just file bankruptcy and the LLC goes away. You can get another LLC. It doesn't hurt you personally because of the separation between LLCs and your personal finance, right? So people can go out and get 3 or 4 LLCs. One files bankruptcy and the other ones can still keep going, right? So I think we're going to see a lot of people that invested in real estate start to put their homes on the market, thinking the middle to the end of next year, we're going to see, I think, a big surge in homes hitting the market because a lot of turmoil is going to be unleashed between now and then. All right, let's talk about another recent survey here, another number that points to the state of the U.S. consumer. Almost forgot my blue blockers today. A record 49% of Americans say high prices are eroding their living standards. University of Michigan study. Inflation expectations soared in preliminary October data, with the year-ahead inflation expectations rose from 3.2% to 3.8%, and I think they're going to be disappointed because I think it's going to be a lot higher than that. The U.S. dollar is still strong, up close to 107 today. That is really strong compared to other fake money, fiat money currencies. Fake fiat, same thing, right? It's not backed by anything. It means they can click a mouse and create trillions out of thin air. In fact, they did it so much in Argentina, they flooded the economy with so much money over there, they had to raise their interest rate over in Argentina. Argentina central bank hikes key rate to 133% as inflation worsens. Argentina Central Bank raised the country's benchmark interest rate to 133 from 118%. So even 118% central bank rate could not stop inflation. It's pretty amazing. I mean, we're lucky in America to be living under the U.S. dollar, which has been the reserve currency for many, many decades. But that's slowly fading away. Right now, the dollar's still strong compared to these other fake money currencies. But what you really need to compare it to is what does the dollar buy you today versus what it used to buy even 10 years ago, even 5 years ago. If you look at all the way back to when the money became completely detached from any sort of asset, let's say 1971, you're talking a large portion of the dollar's purchasing power is gone, over 50%. If you go all the way back to the early 1900s, you're talking about close to 99% loss of your purchasing power with the dollar. So pretty amazing to think about that. Now let's talk about what Social Security recipients are going to be getting this year with the COLA, the cost of living increase, 3.2% in 2024. 3.2%. Folks, that is pitiful. And that's another reason why the CPI number needs to be kept low. They need to fabricate a number that's much lower than reality in order to justify paying out 3.2% on this cost of living increase for Social Security, right? So they're playing their games. We can see right through it. We know what's going on. Not too much of a shocker there. Folks, we've got some interesting things happening over at the U.S. debt clock. We see the M2 money supply plunging, and we see U.S. Treasury dollars increasing. So right now, the M2 money supply is about 20.7 trillion. 20.7 trillion. U.S. Treasury dollars, 1.52 trillion. Right? So we have a long ways to go, but these Treasury dollars are debt-free dollars. And a lot of people are saying, looking at the debt clock, that it's backed by precious metals. So something's happening big behind the scenes, folks. I think we're going to precious metals here in the next few years. Could be a lot of rough times, though, ahead of us, so I don't want to say that out there. I don't want to put that out there and people get complacent and they don't prepare for what's ahead. We're headed for some real tough times, turbulence, before we get there, folks. We're going to have the implementation of this digital currency, this CBDC, digital dollar, and a lot of authoritarian control coming down. A whole new set of rules are going to be applied to people. A lot more controls, a lot more invasion of your privacy, losses of freedoms, all of that in the name of safety. Safety. And you think this sounds crazy? Just wait until you see what unfolds here in the next, I think, 3 to 9 months, right? Maybe even sooner than that, right? So keep an eye on this, folks, and come back to this channel, please, to keep an eye on this together. We're going to get through this together. Keep stacking, folks, because we're going back to precious metals ultimately. For now, though, have money on the side in case we see deflation. Hedge yourself for more inflation. Be careful out there. And I want to give a couple quick thank yous here to some loyal viewers who help support this channel. I think most of you know we're not at the top of the search result list here. I think the kind of news and the kind of topics and the kind of views we put out there are not so mainstream, so to speak, right? But thank you to the following people for supporting this channel. Rose Black Goku, thank you very much. Andrew Williams, thank you so much. And screen name here, Triton 2015X. Okay, thank you very much for your super thanks and your kind donations. Keeping this channel alive, helping me continue to operate and bring you the news, the real news as I see it, and predictions and all that good stuff, right? So please let me know what you think down in the comments about this today. What's going on over in Argentina, the bench rate of 133%, the uptick in foreclosures. Will we see a lot of investors starting to put their home on the market? As the U.S. consumer gets more tapped out, a lot more people are not going to be able to keep up with these crazy rents. And of course, these investors are charging crazy rents, not just because of greed, but because a lot of them bought very expensive homes. Even though it was a low mortgage rate in some cases, they really paid a lot of money for these homes, and the upkeep, the carrying costs, taxes, everything else is pretty high. HOA fees in some cases. So Big things coming up here, folks. Everybody keep stacking. Hope you're well. Talk to you very soon. Bye now. Peace.